Welcome back. In this video, I'm going to cover Uber. They announced their earnings earlier this week, and I have a fresh set of financials to dig into and update my analysis on this company. This is a big investment that I've made in this particular stock. I'll share with you at the end of this video what I plan to do with Uber, whether I'm going to buy more shares, I'm going to hold or sell shares in Uber. I don't think Uber needs much of an introduction. I think we all know what they do. They give people rides. They're getting into the robo-taxi business through partnerships with companies like Waymo, as well as Chinese autonomous car companies. And they're going to go to market in the future with Lucid and Nuro. And Nuro is a company that's developed the technology for robo-taxi. They also do food delivery. So you might be familiar with their food delivery business. Their business size for food delivery rivals DoorDash. Overall, this is a growing business. They continue to grow their revenue, as I'll show in their earnings announcement. They continue to drive tremendous free cash flow, which is one of the principal valuation metrics that I look at is how much cash flow a company produces. Are they growing that cash flow? Could I expect that cash flow to grow in the future? In this channel, I value companies by discounting the future free cash flows as well as discounting the profits a company is going to make. And I'll do that with Uber. I'll share with you that research. I'll also look at the desirability of this business. Is it desirable? Does it have really strong moats to keep competitors out? So we'll take a look at that. And I'll show you my research on the stock, valuing the company. So let's get into the earnings, and then we'll get into fundamentals, the desirability, and then land on the valuation of Uber. Revenue for Uber looked great in their earnings. They grew revenue by 18%, which looks great. And the company is already a fairly big company. In the quarter, they grew to 12.7 billion in the quarter. So if you analyze that rate, we've got a $50 billion business. That's a pretty good sized business. They also expanded their profits better than that growth rate. That looks great. Good profitability out of Uber. I'm going to look at their net cash provided by the business and take a look at that as one of the main valuation methods. And it did come in as expected. I forecast cash for a business and then value that cash. And my forecast was pretty accurate or near where they ended up performing this quarter. That looks really good. Now look at the forecast of the company. Looks good. So for the year, they're going to do about 48 to $50 billion. I just expressed that they're about a $50 billion business, and they're going to be a 17% grower at a business this size. That's terrific. A lot of businesses would love to have a 17 to 21% growth rate. The EBITDA is going to expand faster. That happens with businesses. They establish scale and they become more profitable. If they're successful, they become big, they continue to grow, and they grow their profits faster than that top line. It's just scale, efficiency, ability to really serve the next string of customers far less expensively than your original customer set. So that looks terrific. The other metrics just show that, hey, the business is growing, things are good, the food delivery business is doing well, free cash flow is growing by 44%. I love seeing that. All those things look terrific for me, and I've updated my valuation model on Uber using the numbers out of this earnings release. This is a $186 billion market cap company with revenues at 47 billion. So investors are paying about 4 times revenues for the company. That's not all that expensive for a growing business. They also have a PE of 15. Again, not expensive, very rational. Analysts think it's a strong buy and it's discounted. When we look at the 1 year, stock's up 52%, 5 year up 168. And you see that you've had volatility where the company stock has been sold off, giving investors a really nice opportunity to buy Uber at really nicely discounted prices. So that is great. I like volatility when it comes to really good stocks. A lot of green on the screen when it comes to revenue. I love seeing that. It shows a strong business that's really just taken over market share, and the addressable market for ride hailing continues to expand as we see people really get comfortable with ride hailing and using it for more purposes. And definitely Uber is getting a lion's share of that market share. What is great about Uber is that they're expanding their profitability. If you look at their earnings per share, it's gone from 93 cents a share in 2023 up to $6 a share in the trailing 12 months. Excellent. Cash flows. They had cash flow of 390 million in 2022. They're up to 8.5 billion. Look at that. Awesome growth in cash flow. I'll use those numbers in my valuation, and those numbers look really good. Analysts, 32 of them cover the stock. The most optimistic analyst has a price target at $120 a share. The biggest bear is 78. So there is a little bit of downside risk according to one analyst. Average $101 price target on Uber. As we look at their revenue forecast, it looks really good. The revenue is expected to continue to grow. So no disruption from robotaxi expected in the next 3 years, which looks great. They'll be a $75 billion revenue company in 2028. And you saw how they're growing their profits faster than the top line growth. So you see their earnings per share growing faster. And that earnings per share, along with the growth in cash flow, is going to make them more and more valuable. Excellent. Looks good. Super investors and institutional investors have made a bet on Uber. These big investors like Bill Ackman, David Tepper, Chase Coleman have bought the Uber stock. And I like seeing what super investors are doing because there are a lot of analysts on their particular companies that look at a company and decide if it's a good investment. In this case here, some investors that I think are really good are bought into Uber. I think that Uber is discounted by 53%. That's a pretty good discount. And the way I get there is I've discounted the future free cash flows that I expect the company is going to produce. As I showed, the free cash flows are really growing fast and they're already at a very high level. So when I take their trailing 12 months and expand those cash flows by their growth rate, I get $9.5 billion that I expect they're going to produce in the next 12 months. After that, they're going to grow by 22% years 2, 3, and 4. Then after that, they'll go at 5%. This is a very big market. You think about the international growth, you think about the expansion. As a society in the US, we may see, especially in highly populated cities, people like not owning cars, just taking Uber everywhere. Why would you own a car and have all the expense when you can have the convenience of Uber? When I discount all those free cash flows by 8%, I get $453.5 billion of net present value. I add cash and take away debt, and I get to an equity value of $451 billion, much higher than their current market cap, by up or higher by 58% if you measure the value of the stock versus the stock price. That's a really nice discount. The earnings per share is nice and high, PE of 36, since they are a growing business that keeps expanding profits and cash flows. They get a 40% discount. So I'm far more optimistic than the consensus that analysts have arrived at. And I think that the stock is discounted by 53%. That's a very compelling discount on Uber. That said, I'm going to continue to accumulate shares in Uber. I think the future is going to be very, very positive for Uber. I like the fact that robotaxi is coming. It's going to expand the space. It's going to re-energize the space. And I think Uber is the leader and will just get bigger, more profitable, and generate more cash flows. Thank you for watching my video on Uber. I hope you found my research interesting. I wanted to tell you about the member program for this YouTube channel. It's really been growing over the last 2 months, and I really appreciate all the new members as well as all the members that have been with the channel for well over a year. It's a really nice program that I think will help investors grow their knowledge, their skills, and communicate with other investors. The cost is $10, $25, or $100, depending on what level of perks you would like to have. To get more information, you can visit the home screen of my YouTube channel and click on the join button toward the bottom of the screen. The perks include access to my research. I share my research with the community, and members can access it 24/7 via a shared folder. You get invited to member calls, and the member calls have been terrific. A lot of the small caps that I cover come out of those member calls, as well as live streams. In live streams, members are able to nominate tickers that I will review during the live streams. And last, you get invited to the Discord, and that's a place where we are actively talking about stocks and the market each day. So take a look and see if it's something that's good for you. Thanks again for watching. Good luck with your investments.